Well, gold, you can say gold and the U.S. entities like the Nasdaq and the S&P were basically the winners of the year. You've seen gold rally from below $2,000 to close to $2,800 right before the election of Donald Trump. I mean, there are many factors contributing to this. As you have mentioned, geopolitical factors, the conflict in Ukraine, the uncertainty surrounding the conflict in the Middle East with Iran, Israel. All of this have contributed to this. Another major factor, in my opinion, also the weaponization of the U.S. dollar by the Treasury Department. We've seen the U.S. imposing severe sanctions on Russia and its allies that have pushed many big countries, mainly China and its allies, to diversify away from the U.S. dollar as the main reserve currency. That have increased substantially the demand for gold. We have also seen investors concerned about the U.S. debt. The U.S. debt has increased over $30 trillion. So a lot of people are kind of concerned and looking to diversify away from the U.S. dollars or add to the reserve currencies or reserve in general to make sure that they are not subject to U.S. sanctions in case it gets imposed on them, and also to hedge against the U.S. debt and any crisis that could be a result of it. We have also seen individual investors and retail, institutional, have all flocked to the dollar, buying physical dollar, speculating in the dollar. So by far, it has been the main winner in terms of trading volume, appreciation. I don't think this will continue much further into 2024. Yes, we expect the Federal Reserve to cut interest rates, but we also expect Donald Trump to reduce the amount of tension geopolitically, whether it was in Europe or in the Middle East. That will take some of the, what we usually call risk premium that was added to the gold. This is why the expectation for 2025 for gold not to exceed the $3,000 or the $2,900, considering the fact that we are now at $2,690, that's only $300 range. So compared to almost $1,000 that we have seen in terms of an increase in 2024. So overall, yes, there will be an increase. Yes, there will be interest in gold. But we expect this interest to subside a bit or moderate in 2025 with the rise of U.S. Stock market because of the interest rate cuts and the tax breaks that Trump has promised in the U.S.
Now, sir, shedding light on central banks, what are the key factors driving central banks to increase their gold purchases?
So, like I said, central banks are, especially China, India, big dollar holders, are concerned with the U.S. debt. That the U.S. Budget is basically in a deficit of close to $30 billion, and this is happening on a yearly basis. And there are no hope at this moment to cut this. The other part is they are also concerned with the U.S. Treasury Department. The U.S. government uses the dollar as a weapon. We've seen what happened with Russia. The U.S. froze all their assets, dollar-based assets and reserves. This is a big concern for central banks, especially China, one of the biggest purchases that makes the biggest purchases in gold. This has all pushed those central banks to increase their holdings of not just gold. We've seen also a huge increase in cryptocurrency holdings. We've seen Bitcoin reaching over 100,000. This is all in an effort to diversify away from the dollar. This is why we've seen President Trump not long ago, I think it was last week, talk about the fact that anybody who is thinking to find a common currency, he was actually addressing the BRICS.
Sir, speaking of China, the point you've mentioned, how do you view China's role as the largest consumer and buyer of gold in boosting global demand?
China and India, primarily, they buy gold for consumption, like retail consumption, as well as storage for reserve currency. I see them continuing to have demand for the next year, but I would see this demand moderating as they diversify into other assets. Like I said, cryptocurrency, stock holdings. The Chinese economy is moderating, is actually slowing down. So they'll find a way to cut interest rates, to try to increase the demand for their local stock market. So they may not be as interested in gold as they were in 2024. But it all depends on how President Trump will deal with President Xi on the economic front. We've heard a lot of talk about imposing tariffs on China.